Well. Bitcoin. What do you want me to say to you, ladies and gentlemen? We've got ourselves quite an interesting story developing with cryptocurrency. Tino, why are you bearish? Shut up, man. I ain't bearish. I look for movement. And so should you. Over the weekend, Trump decided to reveal that there could be economic disruption with regards to these tariffs. Now, someone on X put it quite simply. Tariff is another word for tax, and that's the truth. Now, we know Trump is back and forth with these tariffs, and in the calendar today, there's nothing much happening. That means pretty much Donald Trump has free roam to just come along and say whatever he wants. So expect that in your day. Don't worry about any economic press releases. Of course, we just need to watch out when this guy goes onto Truth Social, posts a little picture or whatever he says, and then that causes the markets to rocket. In pre-markets, Tesla and Nvidia have taken a smack. Bitcoin has not really had the greatest weekend, and you're all wondering, what's the R word? What do you think it is? No, it's not retrace. It's nothing other than recession. Today's live stream, guys, we're going to break it all down for you, put it into perspective, because cryptocurrency has not had a real recession. It's never experienced it. And any recessions that have happened before when cryptocurrency was around, not really a concerning thing because crypto was its own thing. No one was really playing it other than dudes in cryptocurrency. Now you've got Wall Street. And when anything like recession comes into play, investors get a little bit concerned. I'm looking to the right of me and I can see NASDAQ and S&P are like struggling at their lows. So it's going to be a very interesting start to the day. Now, usually when the markets start off pretty bad in the morning, there's a thing called balancing in the markets where price usually likes to make a little bit of a recovery back up. But be careful, ladies and gentlemen. It doesn't mean your bull market's going to start. And I'm going to break it all down for you on why maybe now might not be the time for you to pick up Bitcoin. Gave you a heads up before about it with regards to the moving averages and the overall picture. Now we're coming into the idea that the market has to come to terms with the idea of a potential recession and what that means in terms of money being moved. The key takeaway for you in this live, ladies and gentlemen, is about value. Where is value going to go? I know we have a little bit of a laugh and a joke about Bitcoin's price, but to break it all down for you so that you understand at what point will value be triggered at. That means what's a discount for you, but what's a premium for someone else? And we're going to break that all down today in the live stream, ladies and gentlemen. So if you are new, welcome to Traders Reality. My name is Tino, and we are going to break it all down right now for you. Get in with the flavor. Let me get my words out. Stock futures drop as fears mount for the economy. So let's just break it down. First things first, we have this problem right here. Courtesy of the Kabesi newsletter. I can't even say it. But it says here, does the US government want a recession? Technically, they should have had a recession way before because they changed the criteria. They were like, no. Listen, when there is a contraction in the economy over a certain period of time, then we can assume there's going to be a recession. No, don't call it that, man. Yeah, we've contracted a couple of months or so, but, don't worry about it. Let's just get back to what we know. And that's exactly what this is all talking about. In 2025, there's going to be around $9.2 trillion of US debt that will either need to mature or need to be refinanced. Refinanced at what rate, ladies and gentlemen? That means any mortgages, any outstanding loans, banks, credit cards, and all that fun and games is going to naturally be adjusted because of this refinancing, okay? How do you eliminate it? Or how do you get round it? According to this, it says the quickest way to lower rates ahead of this colossal refinancing would be a recession. Things need to slow down because the Federal Reserve has been trying to slow down inflation, but it's had a great labor market. Everyone's been working. Jobs available is going great. AI has been actually fueling investor sentiment to start plowing into the marketplace at the fear of missing out. So is this now the bubble? Has the bubble effectively burst? When you got a balloon and you just let the air and it goes up. That's exactly what's going on right now. That's your marketplace, to put it into an analogy to get you to understand. Could the US benefit from a market crash? Now, what this does is it goes into quite a bit of detail about what's going on. You know, the story with Doge and how they're readjusting everything, which is causing the treasuries to start coming up a little bit. Then it goes into the idea, why would a recession guarantee lower rates? And it says that every US recession dating back to the 80s followed a peak in the federal funds rate. Federal funds rate right now is at 4.5%. There is scheduled bets on the idea that that might actually be coming down, yes or no. We're just going to pull that up for you because obviously my computer ain't doing the business that it needs to be doing right now. Here we go. So in front of you are swap traders' bets and expectations of where they think the market's going to be headed in terms of interest rates. So they're looking at it and it looks like it's holding. 97% of them are betting that we're going to stay between 4.25, 4.5%. Going into the calendar where we are with all other rates, you can see the pound is up here at 4.5%. And of course, US dollar itself at 4.5%. So where are you getting the yield? Remember what I said at the start? We're looking for value, which brings me over to this story over here. We've been following this. 192 on the euro. Oh, man, days, man. 1.92%. What is this? You're looking at it thinking, what the hell is this guy talking about? This is the CME FX swap rate monitor. If you really want to understand where money is going and you're a Forex trader, in order to understand how price is going to move, you've got to understand people's expectation of value. Why would you buy a car? What, because of the horsepower? No, not just that. Is it because of the leather seats? Is it because of the title? New Lambo? All right? What are you doing? You're buying it because it sees value to you. Does it help you in terms of your ego? Does it satisfy you in that area as well? Do you get credibility for it? What is it that you are doing? What are you attaching value to? Now, in the marketplace, value is yield. Yield means money. Money is profit. Profit means Lambo. And that's what we've got to try and understand with this chart right here. Now, when you look at it, you can get 1.92% on the euro. That means exchanging dollars to euros, holding it for a period of 7 days, which is days till expiry. And then, of course, the cost to do that would bring it to about around 1.7, okay, after you factor in the cost of that transaction. Going over into the euro itself, you can see euro is doing very well at these highs right now. Quite choppy, but euro is sustaining itself, okay? Now, they're just having their rates cut as well, man. So technically, the yield should be, you shouldn't be involved in euro, but Germany are putting money into defense. And anywhere that money goes, sentiment follows. So you can see euro is doing pretty well. We've got significant areas in the euro that could actually send it even further, which tells me even more that the dollar and the Japanese yen, I'm telling you now, you're going to get an article that's going to get released and they're going to talk about the carry trade principle because they are unwinding like no tomorrow. They are getting rid of exposure because they are expecting that the Japanese are going to increase their interest rates. The yen is going up right now because of investors are seeking a safe haven. Why do you think gold's consolidating, guys? Look at gold. Preparing for the next move. Preparing for the next event. What's the next event? Well, ladies and gentlemen, that's going to be your recession, isn't it? And whether we get one or not is a different story, which leads me over to this story over here. Probability of a global recession. Right now, it says that if it goes above this 50 percentile line right here, it means that there's a good chance that we go into a global recession. Does it look like it's happening? Nope. Okay, then what about the US? Let's go to the US. Is it looking like the US is going to experience a recession? Well, let me just expand this chart right here. Nope, look at that. It's not really going. It's 11% chance of the US going into recession. But then, of course, when you go into it, or when you got Donald Trump and his economic disruption that could happen with regards to the tariffs, and he's pushing and he's pulling and he's saying, yes, Mexico, we're going to give you the tariffs. Canada, we're not going to give you the tariffs. We're going to go easy on you. And then Canada's like, we don't give a damn, man. We're going to give you these tariffs. And that's the way to play. That's the way we're going to be playing things. Then you got China wanting to do it. S&P and Nasdaq start to make a little bit of a movement. But fundamentally, you can see that we are going into a trade war, because if the US calls bluff, or China calls bluff on the US, and it sticks with this story of tariffs, you've got yourself a trade war, you've got yourself a recession. Now, with that being said, ladies and gentlemen, the US's economy is slowing down. Look at the GDP right here, the real GDP. Starting to go down. There's a trajectory for it to start marking lower. What does this have to do with Bitcoin? Well, what did you all want at the start of January? Your Bitcoin ETF. 500,000 ETF contracts have been played, which means that they've had to buy the Bitcoin to achieve that. And it's all been set out to Wall Street, your mum and dad investors. Now they've got that Bitcoin locked up. It means it's now subject to Wall Street mentality. So when you come into this live stream and you're like, Gino, you're bearish, brother, listen, it's got nothing to do with me being bearish. It has to do with the fact that the millions of other people out there that are working out where they can get value from, they don't think now's the time to be seeking it. Let's back that story up, going over into this part over here. Risk on off indicators suggest to us that institutional fund managers, hedge funds, all the players out there are taking risk off the table and hedging themselves, which explains why gold is going sideways. And that explains why the Japanese yen is going up. Safe haven 1, and of course, potentially safe haven 2, because backing this story of gold going in a sideways motion, you've got this story here that there is a 97% chance that interest rates are going to stay that way, but there is going to be a need to cut the interest rates, which naturally means that the yield on the dollar is not going to be any good for investors because they're going to be earning less money on holding dollars. That would then explain why the yields are going to start pulling back aggressively. Look, yields are coming down 3.9% on the 2-year, going over into the 10-year itself. You can see it's at 4.2%. That makes you think now, where is value going? Smart money, dumb money is putting it into perspective. This blue line right here, when it gets to an extreme of 0.7 or above, it tells us that smart money is actively buying. So when we look at it, is smart money buying? Okay, then well, let's just go over and look at the NASDAQ for a split second. NASDAQ is taking a shoe bag to the downside. It's rolling over. Going over into the market search to put it into perspective, it says over here that you need to, oops, sorry. Yep, just let me show you the NASDAQ. Yeah, I messed up a little bit there, but never mind. Says here on the market surge that you should be removing your exposure and only have around 20%. So this goes back to the story of the 20-20-20-40 method, okay? Only have a little bit of exposure. If you think this is the bottom for Bitcoin, all right? And then we're going to get into Bitcoin price action in a second. If you think it's the bottom for Bitcoin, only pick up a little bit, because when you look at it, ladies and gentlemen, does it look like Bitcoin is trending to the upside? In the bigger picture of things, yeah, it looks like Bitcoin's doing great, because look at where we are. We're at the 50 EMA cloud, but we haven't yet taken the 50 EMA. We've still got this area right here, which is the green vector candle block on the weekly time frame, and it's trying its hardest to hold that zone. And if it can't sustain itself at this point, which currently sits at the 79,907 point, then Bitcoin is going to be coming down to recover this vector. And don't be crying if Bitcoin comes down towards this green vector. You want it to come down, because at the back of it going down, people are buying it. And then what point will the value be triggered that everyone thinks that Bitcoin is now cheap enough? That's what you're waiting for. Zooming out on the profile, oh my days, you can see that these guys mean business. They want the cheaper Bitcoin. Look what's been going over the weekend. You can see here, 40 million is being planted at 80,000. So you can assume that there's going to be some flavor at that point. Someone's ready to commit value at 40 million on Bitcoin at 80K. Once that starts, someone else is going to be like, okay, I'm going to take advantage of that. And that's why everything here is piling up to, look, 28 million at 76,000. Maybe Arthur Hayes could be right this time about Bitcoin. And if you then snout at people who are like, oh, why are you bearish? You should be positive, positive, positive. All right, let me do this then. What happened when everyone was bullish on Bitcoin when it cleared this all-time high? How long can you sustain the idea of being bullish when this thing is taking a shit? How do you encourage people? Now, the people that sat it out, given that if they were buying Bitcoin from these highs on hype alone and where retail's value is at, because retail looks at value differently, it thinks that if it hits a high or an all-time high, that means it has to keep on hitting that all-time high and keep on going, because that's what happens, isn't it? You go to a car showroom and you say to them, I'd like to buy a car that's expensive. They say to you, how about I take you to a car that keeps increasing in value? And you're there like, yeah, go on then. I'll buy it. Yeah, you wet the bed. All right? You get concerned that you feel like you're missing out. But because you buy into it as it's going up, your logic is it's going to keep going up. That's not what value does. You have to be getting involved in value when everyone else doesn't think that value is there. Okay? And the only way that we can really do that is if we start thinking about it in terms of where do these big boy players supplant their liquidity. And it's always after everyone thinks it's done. So again, you got Bitcoin at this high right here, and all the people that were buying as Bitcoin was going down and down and down. Yeah, well, ladies and gentlemen, let's put it into perspective. Your portfolio from that high all the way down to this low would have taken a smack of 77%. I know people were struggling with that, and I know people were trying to hold on to dear life with that, being prompted by everyone on the tube and all over social media. Hold on, hold on, hold on. Okay, look, some people did hold on, some people didn't, some people waited, some people paid attention, and then they ended up seeing the benefit. But don't be those people who are going to start buying when it's clear as day that there could be a potential for Bitcoin to roll over, to come into value, because then once it does, you're going to see the difference. And then you'll see Bitcoin starting to climb up. Let's look at the logically right now. From this current low right here, ladies and gentlemen. Okay, let me just get rid of this. From this low of 16,000-ish, Bitcoin has increased in price nearly 598%. Okay, that's not bad for these gains on BTC. Go to the latest low over here. You can see it's jumped up nearly 123% in price. Okay, so that's not bad for Bitcoin. Naturally, you're going to be expecting if they can jump up 123%, they can go down at least 70%. So then when we look at Bitcoin's price right now, you can see from that high, it's only down 40%. You guys are all rolling on 80s and 60s, 60 to 80% corrections. And people are complaining about it now because it's come down 40%. You ain't had the smack yet. It's when the smack comes to you and you're thinking, damn, like, this is crazy right now. How much blood is there across the board when you establish the blood, when you see the stock market starting to regulate itself? Look at what's going on here with the volatility index. Right now, it's coming up. There is a strong chance if the idea of recession comes into play, we are going back up to this wick. Okay, we are going back up towards it. And that, ladies and gentlemen, will start a very significant move to the upside. It might take a little while, but it all depends on how the market's going to translate the idea that everything is going into the pan. Okay, so you've got to put it into perspective. Is now a time to start buying Bitcoin? Would you feel comfortable buying Bitcoin, or have you just found enough positive posts about Bitcoin suggesting don't miss out because your faces are going to melt? Wake up, man. You're playing the hardest game in the world. And if you're trying to make money in this game, then you've got to follow the money and not follow. Don't even follow what I say, ladies and gentlemen. I'm giving you my experience and my expectation, okay? I witnessed your crashes in the marketplace. Yeah, I'm 40 years young. Well, 40 this year. But I sat through that 2007, 2008 subprime mortgage crisis. I saw all that unfolding. I experienced the recession in the 1990s, okay? And I wasn't that young. I wasn't that old. I was really young then, but saw the impact of it. When you're looking at the stock market, ladies and gentlemen, it's the easiest way to understand where we are with investor sentiment. And that's going to be the reason why Bitcoin is going to continue up or it's going to continue down, okay? You go over to your ETF, you know exactly what's going on with that. They go anywhere below 500K on this, then we've got ourselves a bit of a problem. BlackRock has been selling their 20, let me refresh this, because that was then this morning, 27 minutes ago, not 27 minutes ago, but this morning at about 10 o'clock, that came up, and we haven't seen anything else from there. So 57 minutes ago, Bitcoin, they've actually moved the Bitcoin, but we've seen deposits into Coinbase Prime. So that tells me that BlackRock is effectively getting the orders from people to offload the BTC. Liquidations are coming into play, but everyone's getting liquidated. But usually what happens now is that there's usually a bit of a balance in the market. And at the start of the week, what we know is price can usually make a false move up or down. Now, going into this week, guys, you've got CPI data, good old riff, or inflation. The idea is they're expecting it to go to 2.9%. All right. If we do get 2.9%, the Federal Reserve doesn't need to cut any interest rates. Why? Because it looks like things are working. You don't want a reading of 2.9%. You don't want them to think that it's going down. You want them to think it's going to go up. which is naturally going to be a reason for them to cut the interest rates, which backs up the idea of the expectation of retail traders and hedge fund managers all betting on swap traders betting that they think that the interest rates are going to stay within the region of 4.25, 4.5%. Okay? Ain't going to be going down to that 4%, 4.25%, because there is so much impact that this Trump story is going to have on the marketplace, which naturally leads investors to take risk off the table and wait for the markets to calm down. That's where we are with it all, ladies and gentlemen. Paying attention to your bonds market, you can see investors are going into bonds because they know interest rates are going to come down at some point. They need to lock in the decent yields. And because there is a spread on the yields, that's not good. You need the spreads to be tight, not wide, 3.941% on the 2-year, and then you got 4.2% on the 10-year. It needs to be relatively close, okay? Ish. But that wide spread is giving us the idea that there is a liquidity issue, taking it back to the idea of debt. How's it all going to be refinanced? Where's the money, man? That's why Trump is trying to get as many people to come into this tariff story, tax as many people as they can, reduce the debt deficit, and get it down as much as they can. That's where we are with it all, ladies and gentlemen, to put it into perspective. Any questions? When it hit 60K for the first time, BitBoy said it would never hit 30K again. Then it crashed down past that point and he missed out on a lot of money because of that. Listen, when someone says it will never, it means that they've never really experienced what a market is about. Okay? You never thought that Lehman Brothers would ever crash. And that was one of your biggest banks out there. It crashed. Royal Bank of Scotland messed up. Does everyone remember that? Yeah? Okay, then. Don't ever say that it can't. No matter what, ladies and gentlemen, your Bitcoin, at any moment's notice, these people who are holding on to this ETF, you understand? They've got to put the order and sell the ETF, and then the ETF's got to go from the transfer agent. They've got to dump it into Coinbase Premium, and then that's where all transactions take a little bit of time. Remember, BlackRock's got to get paid. So it doesn't matter if Bitcoin goes up or down. They just need you to keep buying it and have a belief mechanism. But you've got to look at it logistically. If the markets are in the belief that Bitcoin's going to experience a recession, because crypto has not really experienced one. It says it here. Crypto's never seen a long recession. Here's what could happen. Okay? Goes in to say that the US could be headed towards a recession, potentially unprecedented test for the crypto industry. Outside of the 2-month recession around the COVID pandemic, crypto has never experienced any legitimate economic downturn. So do you understand why everyone's like, hold on to your Bitcoin? Now is the truth behind it. I had a conversation with Mike about what would happen if MicroStrategy were to get liquidated. And we pretty much came to the idea that if MicroStrategy were to get liquidated, what would happen to the Bitcoin? Well, it all depends on if MicroStrategy does have the ability to actually raise the funds without selling the Bitcoin. Now, some of you are like, they will never sell, they'll never sell. Well, if we've got a recession going into play and you've got these people sat with this Bitcoin ETF, because it can go down. Don't think it can't go down. There's only so long that someone can retain the idea of value when it all looks like it's not looking good across the board. Okay? If you've got NVIDIA right here, guys, getting ready to roll over in the next 10 minutes, some people will see it as a discount. Some people will see it as a problem. It's all perspective. In my opinion, ladies and gentlemen, Bitcoin up nearly 2% for the day is only because of how it's been behaving lately. All right, it's been going down quite a bit and it's shaking out a lot of people, and it's giving a lot of people the idea that it's time to go short on the Bitcoin. And the short sellers might be in luck with it because Bitcoin could be subject to corrective movements to the downside. But you've got to be careful of how Bitcoin behaves, because you need to look at how it behaved this morning. It did a nice little spike up. Everyone was like, go short on Bitcoin. They went short and they ended up paying the price. Okay? So just be very careful when you are looking at Bitcoin and you want to say to yourself, yeah, man, I should buy it. Because quite frankly, the logic is this, guys. You go and look at Bitcoin on the daily time frame and say to yourself, should I be buying Bitcoin right now? You might get yourself, you might get yourself a nice reversal to the upside on Bitcoin. You are the G, you are the Don, you've called it. I bought Bitcoin at 82,000, now it's at 90,000. I'm the big D. All right? Comes back, tests a 50 EMA and comes all the way back down again. And then you're like, I ain't so big with the D anymore. Now you're back at your entry point. Now you're back to the same logic of what you were thinking before. Are you going to hold on? Because you think prices come back down to that point, so it's bound to go back up again. It did it over here. It's doing it here. So it might do it again if it comes back down to it. And then that's when it goes down and sweeps the liquidity. This is your vector candle. This is where 70K is. And you've got a lot of people that want to buy it. This is not negative for you guys. Trying to get you to understand where value sits. And if you can get the idea of value in your minds and cut out all the shit that comes out about cryptocurrency, you're going to be putting yourself into a better position to actually say, you know what? I'm going to approach this strategically. Hypothetically, we go into a recession. What's that going to lead to? Yen up, euro up in principle, dollar's going to go down, bonds market are going to shoot up, everyone's going to seek safety, everyone's going to plow back into the ETF market, defense-based stocks, ETFs. They're going to be leaving their money in there until they start to see the economy starting to show promise. Refinancing of debt is going to obviously put more pressure on the marketplace, and then they're going to force the interest rates to come back down again, and then it's going to come down, and then no one's going to want to take on the supply of money that is being provided for them because there's no point, because the economy is not showing promise of that. Look at how many times China has pumped liquidity into its marketplace and nothing has happened. Look at oil. Is anyone consuming oil? No, because there's no economic activity. So if there's no economic activity, oil's prices stay low, which will achieve what Trump is trying to achieve at getting it down really, really cheap. But money ain't moving. It's not going into the areas that you'd want it to. However, are we at points of where everyone has wet the bed and feel like it's now time to start buying? Not just yet. You've got your red vector on that VIX, ladies and gentlemen. And if you look at where this was on the 5th of August, which was the carry trade unwind, that made a lot of investors get a bit concerned. We heading into a recession? And if we do come out with the idea that we are in a recession, that's going to lead investors to start offloading, because when you look at the NASDAQ and the S&P on this chart right here, value is still present in the stock market. Why? Because look how much it's been going up. Look at the weekly chart. Yeah, it's broken a significant moving average on the NASDAQ composite, massive moving average, and it's above volume as well. That's a problem. So this is where things start to get a little bit cheaper. We might be going into something like this, where we had a corrective move down, and then they just prepare it and they bring it back up again. Remember, the stock market has a 100% success rate at recovering from crashes. So don't worry, man. It's all good. Might be a bit cheaper, but boy, it will retain itself and come back up, especially when you've got an asset like Bitcoin going up 500% in less than a year and a half or two. You're not missing out on anything. Remember, what's cheap, what you think is cheap now might be expensive for someone else. And it's clear as day that they think it's expensive because it's not going up. It's not cheap enough yet. Capiche? That's the logic. Any questions, ladies and gentlemen? Any other question? I did ask you earlier on. Okay. So Trump is trying to force the Fed pivot. Yeah. You know what? The Fed has already pivoted. Okay. It's pivoted a few times and the market hasn't crashed. That's how you know things are different. It's not the same. The Fed pivots and then the market crashes. What happened was the Fed pivoted a couple of times, got it down from 5.5 range down to 4.5. And guess what? It kept going up. And that's why we kept seeing the logic of don't fight the Fed. But you've got AI to blame for that. That's it. How long do you think we will have to hold? Listen, again, how long do you think the idea of value, how long will it be before value comes into play in the market? You've got vector candles down here, and we said they were going to come back to recover those vectors. It's taken a little while, but we're looking on the daily time frame, okay? And Bitcoin with its jack-in-the-box behavior, right, naturally makes people think, oh, it's going to go up, oh, it's going to go down, oh, it's going to go up, it's going to go down. Listen, if you understand where big money is going, then your 2 trillion, where is it? Where's cryptocurrency market cap right now? Your $2.72 trillion market cap, you know, it's a small amount of liquidity for a marketplace. All right. If I said to you, follow this car in front of you, all right? And you say, which car? And I say that big fat red one with the big daddy tires on it, with the fat exhaust. Follow that car. It's going to be easier for you to navigate where that car's going. Yeah. But then if I say to you at the same time, actually don't follow that car, Follow the ant that's on the motorway right now, that's running. Follow that. And you're like, where? I don't see it. Look, it's there. No, I can't see it. I can't see its movement. That's what you're dealing with right now. Cryptocurrency market cap's 2.72 trillion. NASDAQ's market cap, the composite, is around 25 trillion. The bonds market is 137, 140 trillion dollars. Why would you give two shits about what anyone says about blockchain? Follow the big money. That's the truth. Here we go. Micro can't get liquidated. Here we go. Hold on. I want to read that. Where is it? Where is it? I just saw it. Who wrote that? Micro? Here we go. Micro can't get liquidated, bro. You need to look at it. What? Why can't... Hold on a second. Hold on. Why can't MicroStrategy get liquidated? Why can't it? That's like saying Bitcoin can't go to a specific price point ever, because you're saying to me that everyone is going to have the same belief about Bitcoin and it will never change. If that's the case, why the fuck we not at 500,000 Bitcoin? We're not. So, go back into it. Why can't MicroStrategy call liquidation? Why can't they be forced to? Look, this is MicroStrategy right now. Now, we do know that MicroStrategy doesn't necessarily hold all the Bitcoin. You've got the MacroStrategy behind it, okay? Because then that protects them. If they like give us all your Bitcoin, like, well, we'll give you what MicroStrategy has, but MicroStrategy is doing fine from a perspective as a business. Here we go. So MicroStrategy, as it is right now, is currently trading, and the NASDAQ is just taking that significant drop to the downside. You want to see it? There you go. This is value, ladies and gentlemen. Here we go. There's your NASDAQ, 4-hour candle. It's just going down. It could make a snap reversal because that's what happens at the start of the market. Just be careful when you do trade the opens, because this behavior is absolutely crazy. But it looks like everyone's offloading, okay? Now, MicroStrategy. Fundamentally, as a business, it's dead. You're relying on the fact that it's holding Bitcoin. That is it. You know? That's like buying a car with 4 wheels but no engine. You're relying on the fact that it looks like a car and it looks like it could behave like a car, but then when you sit in the car and you put the key in the ignition, you find that it has no engine and it is fundamentally looking like a car. So the expectation is that people will look at it and think it's a car because it's got 4 wheels, but it doesn't behave like one. MicroStrategy is exactly the same thing. It's a stock holding, it's a company, okay? Specializes, now it's changed it, provides Bitcoin treasury services as well as an analytics software platform for various industries. The company's got bipolar in the sense where it doesn't understand what its service is, but it's just relying on the fact that you are holding onto their stock because of their Bitcoin holdings, which they are making you pay for it. Am I shit talking MicroStrategy? No. Trying to get you to understand that value and people's expectations can change. Just because you hold a lot of Bitcoin doesn't mean that people will hold on to it because you do. It's their debt, not everybody else's. You know? That's my logic. Now, whatever financial practice they're doing to protect themselves from liquidation, well, they will always have risk. And only something crazy would have to happen. If they go to 67,000, which is the average price of the amount of Bitcoin they've got, which is around 497,000, still less than what the Bitcoin BlackRock ETF has, then it could happen in a spike. But if it spends a bit of time there, then they're going to be saying, look, man, you need to repay these loans that you've been doing, which is why they're coming to the public and doing convertible bonds, because it looks like no bank is going to touch them. So now the risk is on the bank. But the banks that have got the money with them are looking at it saying, okay, 6.9% yield on the amount of Bitcoin that you've got around $45 billion worth of profit. They could be told to do something about it. But now they've become a treasury. They don't always retain everything inside of a treasury. There is some element of buying and selling. But that's my opinion. But what do we know? We don't know anything. We just don't know. Yes, Sailor will be, look, fundamentally, Sailor will be fine, okay? But the traders that have bought the stock are already screwed because when they bought the stock at $380 on the convertible issuance of those bonds, they were told that you can't do anything about it until it hits $625 a share. At $260 a share, where do you think they're at now? There ain't no forced liquidation coming into play. Those traders are done. So now it's a game of where they're going to hope that Bitcoin moves up and they're going to hope that the stock market goes up. We just need to see that catalyst because if they're throwing the word recession, we need to see that getting priced in. And this idea over here with the volatility index, that needs to come down, all right, to suggest that investors are cool about it. Because this is going up, might be a bit of a problem for us in the future. Don't shoot the messenger, ladies and gentlemen. I'll bring you the reality of the way this game can operate. But human nature doesn't change. We ain't had a recession yet. We've had so much economic expansion. And you know, with my chart over here, the last time we had massive economic expansion, it was 265 months of US economic expansion. 2007, 2008, subprime mortgage crisis comes into play. Reset. Back up it goes. Mad love and respect, ladies and gentlemen. I hope this brings you to a little bit of an understanding on how to really approach looking at this game. It's your money at the end of the day, gang. All right? Just preserve it. But more importantly, preserve the mental capital as well. Hit the like button and subscribe on the way out, guys. That's the cheapest thing you could get from today. That's value, in my opinion. Peace.